Today was a turbulent day in the stock market. China's not backing down, and neither is Trump, which is exactly what the stock market doesn't want to see. A lot happened today, setting us up for a volatile next couple of days.
There has been a lot of gap ups and gap downs in the stock market over the past couple trading days, and today, especially this morning, we had a nice gap up in the SPY pushed up towards 670 resistance, but as the day progressed, we saw the SPY start to sell off as trade tensions were heating up again. Yes, Treasury Secretary Scott Bessent came out today and said that a stock market decline will not deter the U.S. from taking strong action against China. China's trying to play hardball with the United States right now, and they're pretty much waiting for us to buckle. But at the same time, China has a lot on their plate as well. So both countries right now are kind of hitting back and forth at each other, and they're pretty much saying that, hey, even if the stock market goes down, we don't care. We're going to keep taking action against China. Of course, that didn't sit well with investors today, and that's ultimately what caused a lot of that big drop there in the middle of the day. And man, Mike, I mean, that was quite the sell-off from 670 all the way down to 660. That was a 10-point drop.
Definitely, and looking at the situation a little bit deeper, according to people who are close to Xi Jinping's decision-making process, basically said that he has like a hardline strategy based on the belief that Trump is ultimately going to fold and offer concessions rather than deploy, the U.S.'s significant leverage. And he's basically saying that this confidence is fueled by the U.S.-China trade truce that was stuck back in May, where Trump imposed tariffs of more than 100% on Chinese products, but then backpedaled after China used its own leverage as the world's most important exporter of rare earth magnets.
And right now, it's a battle of two big egos. Ideally, it'd be better for both countries to come to a deal, and Treasury Secretary Scott Bessent discussed the possibility of a longer-term tariff truce today. I thought that this was actually pretty positive. There was a 90-day truce from back in May and another one in August that is set to expire on November 10th. He suggested that there could be a third 90-day truce in November when the current pause is scheduled to end. My big question, though, Mike, is, right now, we're in this 90-day roll with all these tariffs. Of course, there's that looming 100% tariff on November 1st as well. So there's still that to come even before this 90-day tariff pause ends up ending. So there's a lot of negotiations going on right now. And Bessent did say that he was optimistic about China and their communication with them. So I thought that there was a lot of negativity today, but there was also a few positive statements as well.
Yeah, and that's always great to see, but the problem is that it's not like Scott Bessent or a lot of these other trade representatives, they're not consistent. Like, yes, it's great to hear him say that he's optimistic about China, but at the same time, he's also saying stuff where he's like asking the World Bank to end support for China, which is only going to instigate the problem more. And then Trade Representative Jameson Greer basically said the only way China can avoid those new tariffs is if they drop the proposed rare earth export controls. And keep in mind, China and the US have had trade issues for a while, and whenever they flare up, they tend to be really bad, and a lot of times they don't ever truly go away. Like over the past year, it has just been 2 back-to-back 90-day tariff pauses. The root problem is still there. Obviously, a deal would be best for both countries, but, it's getting to crunch time now, especially considering the new 100% tariffs that Trump just put in last week are set to go into effect on November 1st. So, yeah, things are definitely heating up a little bit.
They are, and then there was even more fuel to the fire today. The Trump admin is apparently going to be setting price floors as well across a range of industries to combat a lot of China's market manipulation. So essentially, the Trump administration wants to use price floors to stop China from taking prices or tanking prices and wiping out U.S. competitors in key industries. It's a form of economic defense, protecting critical supply chains by guaranteeing domestic companies can survive and compete even if they can't match China's pricing. And, we've seen the government actually take some stakes in other companies like MP Materials, for example, to try and, let's say, hit back at some of these export controls that China's doing with rare earth magnets or rare rare earth materials. And there could even be other potential stakes taken in the future as well to try and boost U.S.'s independence in this range. But overall, there's just so many things hitting today, Mike, and we're still waiting on China's retaliation from what Trump said yesterday as well about them purposefully not buying soybeans.
Yeah, so that'll definitely be a big market event depending on how they retaliate. Let's keep our eyes open for that because I'm sure it will have an impact. And another thing to keep in mind is that, we're in that time of the year that has an unusual amount of bad market returns. We can see some of the worst downturns in stock market history have all happened in October, whether the most recent one of the great financial crisis in 2008, where the market fell by 17% in October, or even Black Monday, the crash of 1987, where it fell 22%, or the crash of 1929, where it fell like 20%, World War I, and even the banking panic of 1907. So yeah, it's kind of like an eerie month, and we're certainly not to like panic mode yet, but there certainly is some risk on the table.
Yeah, exactly. Like the SPY's still fairly close to all-time highs, and it's not like we've had a true like overall pullback / crash yet. I know that last Friday was a pretty rough move, but looking at this here, that definitely is a bit worrying, right? And what happens if down here people start saying the AI bubble or something, that'll be the next one where 2025 or 2026 ends up being listed. But that's not even it here for all of these stats. We're going to have a lot of stats here coming up over the next few minutes. But looking at the SPY from today, Mike, it was very back and forth. We had that big gap down in the middle of the day. We had that gap up early this morning where there was a lot of buying pressure. And then the SPY ended up closing pretty much right in the middle of that range, around 665. So what I'm really watching for tomorrow is the upper end of today's range and the lower end of today's range. The lower end extended down to 658 to 659. I thought that was a pretty big area of support, just under 660. So I will be watching that for a potential breakdown coming tomorrow. Then I will be watching for that low from the past few days around 654 to 653 to end up coming into play as well. Right now, I think that the SPY is so back and forth and there's so many headlines coming out that you can't marry one direction, and adapting intraday has been the name of the game. Like, look at yesterday morning. The stock market sold off, filled the gap, touched support, and then shot higher. Today, the exact opposite happened. It opened, it shot up by just a little bit, touched resistance, and then died. So you have to be ready for those intraday swings right now.
Yeah, and like we are still very close to all-time highs in a broader sense, but we are in a much weaker and much more sensitive market than I think we've been in at least for the past few months because, like today, the market was running hot, but, all it took was a few, somewhat negative headlines and, SPY lost around $10, which is a huge move. And realistically, today wasn't even like that mind-blowingly crazy. Like you said, we still haven't even gotten the retaliation from China yet. So yeah, that'll be interesting. I would definitely say to keep a close eye on that 660 area for tomorrow. If that gives out, that would be a worrying sign. We do have other key support levels below that, especially around like 654 or so. But yeah, I would say these are some key levels to keep close on watch for tomorrow. And another thing to keep in mind too is the S&P 500 just closed for 3 straight days below its 20-day moving average, which is the first time it happened in over 80 days. And historically speaking, this is not the best sign in the short term.
Definitely not. I mean, look at the 1 day, 2 day, 3 day later categories. And my gosh, especially if you look like in the modern readings, like there was a big gap in the data from 2007 to 2017, like a big 10-year gap. But once we got that March 23, 2017 reading going all the way to the most recent reading, my gosh, Mike, I mean, that is one red box there. With the average percent return for 1 day later overall being negative 0.38% and the market being green 2 days later, only 36% of the time. There's definitely a lot of worrying statistics here on this chart. So just keep that in mind over the next few trading days. It looks like when the SPY closes down under the 20-day moving average, it doesn't bring in a lot of buying pressure, at least in the immediate short term. But as we start to zoom out, things get a lot more positive at least.
And if we zoom out even more, we could see that in years like this one, the stock market does tend to get a pretty strong boost around like November and December, which is great to see. Last year, it was an amazing year in the stock market, and historically speaking, that momentum does continue.
Yeah, that was a great jump at the end of the year. I know a lot of people like to attribute some of that to maybe some Christmas buying, different holiday spending, things like that. Hopefully this year we have some good holiday numbers come out and it doesn't end up coming out that consumers are strapped or something like that. That could end up definitely changing things around a little bit. But I know that, there's a lot of data that was expected to come out this week, like the PPI data, the retail sales, the building permits, and the housing starts. Just keep in mind that these are delayed as the government is shut down right now, so those probably will not be releasing this week. But the earnings have been pretty fun this week, Mike. ASML had a positive report this morning, and that's ultimately what helped fuel a lot of the morning buying pressure. Nvidia gapped up, and a lot of chip stocks were running with ASML's report today. Tomorrow, TSM will be reporting in pre-market, one of the biggest chip makers in the world, so be ready for them, along with a lot of other banks like Charles Schwab's and others.
Definitely. And TSM is one of those influential companies, like you said, where because they are one of the largest chip making companies in the world, they naturally have a big influence on the chip and just AI sector. Because if they are crushing it, it's probably a good sign that other chip companies are too, and vice versa. So this report will be influential. Keep it close on watch. And besides that, Tom, let's get right to the fun stuff, which are some setups and predictions. A stock that is close on my radar is ticker symbol BG. Basically, this stock crushed it today as it popped up by nearly 13%. Basically, Trump yesterday threatened to cut off U.S. purchases of Chinese cooking oil, and ticker symbol BG is one of the largest soybean processors and cooking oil producers in the world. Clearly, there is a lot of news driving this movement. The stock has momentum as it is, and basically the talk of the market right now is this US-China trade flare up. So this stock is certainly in play. The more pressure it puts on recent highs, the better and stronger the setup becomes. And I think this has potential to be somewhat similar to like the setup we saw just a few weeks ago with pharmaceutical stocks. So like, for example, if we go to like a chart of Pfizer or Eli Lilly, we can see that they had that Trump RX news and they had like a really good boost for a couple trading days. I think BG has the potential to be something like that for as long as it continues to put pressure on recent highs. It's definitely on my bullish radar.
Yeah, it seems like today's just day one of that really big jump and uptrend, so I would definitely look for a continuation in the short term, and it is getting close to that $100 resistance. That would be a big level to watch for over the next couple trading days. But with my first stock, I'm actually looking at Hims. Yes, Hims and Hers, actually, and the news comes from the Hers side of their business today. They launched a new menopause medicine, and we can see they also were up 16% today, and the really positive thing with Hims is there was a major resistance in the short term, right around $60. And with this move today, it helps solidify the breakout at 60. And I'll be watching for a continuation tomorrow for sure. I love the way that it closed pretty high. It did fall a little bit right at the end of the day, but for the most part is closer to the high than the low, of course, with being up 16%. But if it breaks above 65.30, I will be watching for a continuation. It has news, and this is a stock that likes to run. Like if we go to a daily chart, you can tell that whenever it starts to trend and break out, it can continue for quite a few days sometimes.
Definitely. Yeah, let's keep it close on watch. Another stock that is still on my radar is Nvidia, and it's to the downside. I know the market technically finished up in the green today, but even with that, Nvidia still finished in the red. It is very relatively weak right now. Even with, some of the market's positivity today, Nvidia ended up breaking through that 180 support that we mentioned in yesterday's video, and it is still on my bearish radar. While Nvidia is an absolute beast, and while it's probably more likely to rise than not, I think it offers a very asymmetric risk reward playing it to the downside, where the more pressure it keeps putting on these lows, the bigger drops it can have. As we know, the stock market takes the stairs up and the elevator down. There is a lot of leverage still in the system. Nvidia has been one of the hottest and best performing stocks over the past few years, and I think it is especially vulnerable to a real pullback when one does happen. Either way, Nvidia's on my bearish radar.
Yeah, that was a big breakdown today. Zooming out over the past few weeks, that 180 point has been pretty critical. So that was a big breakdown today. I will definitely be watching for another rebreak back below that tomorrow. But with my next play, I'm actually looking at the exact opposite. AMD. Yes, NVIDIA's little brother almost here. AMD had like the exact opposite price action today, Mike. They closed up 9.4%. That was quite the run, and they're sitting right at a major point of resistance here. So 240 is going to be a big area of resistance for Advanced Money Dispenser. As we can see on the hourly chart, they rejected here in the past, or very close to 240, and I am watching a sell wall in the short term as well. We can see at the end of the day today, at 239 and 240, there were some massive stacks of sellers. Around that 239 point, there were two different stacks, one with 200,000 and another one with 154,000 shares. And then at 240, we had a 604,000 share stack. So if we can keep holding above 240 for tomorrow, I'm going to keep looking for more good upside momentum with AMD. I like how it's also pushing that recent resistance. It gives us a really good level to break above. If you want to be super safe, you can make it break above that recent high of 244 and just try to play the new highs being made.
Yeah, it had a ton of momentum today. I know Oracle announced plans to use 50,000 of their AI chips, and multiple analysts raised their price target on AMD. So good stuff there. Let's keep it close on watch. And besides that, let's jump right into today's momentum plays. And with the first one, we have Navitas Semiconductor, ticker symbol NVTS, to the upside.
I can't believe this stock closed above $15. It has been insane lately, but if it's able to break its high of day and double top close to $15.50, then watch it to the upside.
All right, with the next one, we have First Solar, ticker symbol FSLR, also to the upside.
This one was a bit surprising today, up 8.9%. If it's able to break above its high of day close to 248.20, then watch it to the upside as well.
And then with the last one, we have Open Door, ticker symbol OPEN, to the downside.
Ooh, this one had a pretty nasty sell-off today, closing down 3.4%, and there's like a quadruple bottom here around the end of the day where it finally had that nice end-of-day bounce, but if it breaks under 7.34, then watch it to the downside.
All right, so we have these three stocks on the radar for potential continuations tomorrow, if and only if they break through the levels listed. These stocks are volatile. You need to protect yourself. Whether you're looking at one of these three stocks or something else, prioritize making smart, long-term oriented trading decisions above all else. If you need help, check out the Key Lessons channel of the StockedUp Discord, and you can learn for free. But besides that, Tom, we're not wasting any time, and we're jumping right into today's $3.3 million big money trade, and this one is pretty crazy. Today, we are looking at ticker symbol DUOL. Duolingo is a stock that has been struggling over the past few months, and the trader here is positioning themselves to make quite a bit in the event it pops back up. Today, they bought the 380 strike call options that expire pretty soon, actually, on November 14th of 2025. For all of our advanced traders out there, this is technically a call debit spread where they also shorted the 430 strike call options. The trader here is risking around $3.3 million to make $12.6 million. This trade is certainly interesting, where it's certainly like a bold setup. The risk reward is very asymmetric, but I will say there is like a little bit of risk in the sense where, this trade will not be profitable until DUOL gets past $380 a share. So, we do need a big move here for these options just to get in the money.
Yeah, that's a pretty big zone there, between that 430 and 380 strike. Definitely getting above 380 would be pretty tough in the short term, but it does look like DUOL has been on a pretty nice uptrend from this recent support. Double bottom close to 260. Now we've been pushing over 300 in the short term and actually bouncing off of it, which is a good sign. I would say as long as it keeps holding that $300 support in the ultra short term, things are going to be okay. But it is a high risk, high reward play, though, I would say, given mainly because of the time, and then secondly, just because of how far it needs to move. But if it does continue on this uptrend, you know, it's been moving up the past couple trading days as well. If it breaks that recent high, I don't think it would be very far off from 380. So, you know, we could definitely see that come into play within the time allotted. But we are going to need some big movement. And ideally, Mike, you know, we get a good gap up like over here. That would be perfect.
Yeah, that would be huge. So either way, let's keep it close on watch. We've definitely seen a handful of unusual big money trades where, you know, you see a big trader enter and then, you know, coincidentally a few weeks later, some crazy news hits or something like that. So either way, we'll see what happens. But Tom, let's also give a giant shout out to today's member of the day, Martin H. in the Stocked Up Discord, who said, thanks, Tom, pushed to 436 and then 440 with some Tesla call options. So shout out to Martin, but also shout out to Tom with the assistance here. Keep on rolling, Martin. It's great to see these profits. And if you guys are new to the channel, welcome, and consider obliterating that subscribe button. Every single day, we do multiple hours of research to cover everything you need to know in the stock market, whether it be breaking news with China, SPY levels and analysis, big money trades, important events, earnings, historical chart stats, and so much more. When you subscribe, you'll get our videos recommended to you more often. And if you guys are into short-term trading, definitely check out that first link in the description and the comments down below to get in on the action with the Stocked Up trading floor. You can join our weekly live events, which is actually tonight. You can get access to the big money trades that we cover in every single video on the same day the trade is made, access our army of custom trading bots, and so much more. It is the spot to be for short-term trading, but the market is definitely heating up quite a bit. We have a lot going on right now, so it should be a very exciting rest of the week. Thank you all so much for watching, and let's crush it in the market tomorrow.